Hello, Forex trader. How's it going, guys? I am back with another amazing video. If you join me for the first time, my name is Miguel, and this is the segment of my YouTube channel, guys, where I come and break down the chart. It's called the trader chart, and and I'm very happy today because this is the first episode of my trader chat in the year. So before jump into this video, before I do anything, I will advise you guys to go and ahead and subscribe to the channel so that you guys don't miss out on any of this information, which is uh, high quality trading educational. Now let's jump to the video. Let's jump to the video. Um, in this video, I will speak about some pairs. So let's start with which guys which what are we going to start with? Let's start with let me speak about uh, Euro USD. Yeah, Euro USD. USD. Guys, let's start from monthly. Yeah. Guys, if you can notice, guys, this the current the market is at historical support and demand area, which is if you can see in the history, you can see that the market they test this area and then reject it, they test this area and then reject it, they test this area and then reject it, they test and then reject it and then break it, and then again go to the upward and then retest it and then reject to the upward and then reject it and then reject it to the upward and then reject it and then going to the upward and then now break it, and then you can see currently, guys, that the market break it and then the back came and then push the market from last week up to now. The back came and then push this market to the upward to test this historical um, support and demand, which is stand now resistance. So guys, in monthly, what we can see is we only have impulses and there is no correction, and then this is the only candle, the only correction we have. Yeah. So for the film past months, previous months, we can see that we only have impulse, and then this is the only the correction to touch this area here, the resistance here, guys. So in the monthly, what we're expecting more bearish continuation price action. Yes, guys. So when we drop down to the weekly, guys, that is where we have a lot of information. Also, again, we can notice that the market it is at the same area. But if I take my Fibonacci level, you can notice that the markets come to retest this 0.5 Fibonacci level. It's already retest 0.3, 0.3. It should be here, but I prefer to only 0.5 and 0.6 because that is the major level, major zone, major zone for Fibonacci. Yeah. So uh we can notice that, guys, the markets we are from printing we are printing higher higher low, higher high. This lower low, lower high, lower low, lower high, lower low, lower high, and then it's not yet breaking this. So the structure is not yet break, which we can say the market is on the bullish. But if it break this area, and then do like this, guys, do like this, break this area, and then maybe retest it. That is when we are going to say maybe the market where it's going to be in bullish momentum, bullish price action like this. But for now, guys, the market still respect this area. If you can see the market start rejecting this area, indeed we are going to see it. Yeah. So when you drop down to daily, guys, we can notice that um, the market is from the market is from it's from printing lower low, lower high, 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 lower low, lower, and then and it's starting now again. It refused to break to make a lower low here. So it starts to make higher high, higher low, higher high. So guys, and then I noticed that there is this support, this resistance, this previous resistance, which is now returned to support. You can notice because it's failed to break it's breaking to break it, and then now it's break it and then touch it and going to the downside. Now it's reject, but it's break it. So we expect the market in a lower time frame to do like this, to come and retest it and then push to the upwards. Yeah, to test this area, this weekly and the monthly resistance. Yeah, this one. Okay, like this. And then maybe from here we can see maybe the market to go downside. But if it's break it, and then we expect the market to go upward. So but for me, I'm not interested in this. I'm interested to see the market do like this. To do like this, to break this area, to break this area, and then retest it. And then that is where I'm going to look for maybe sales positions from here. Yeah. To the downside, up to which, let me go to weekly. Yeah. Up to this area, guys. Yeah. This is what I expect the market to go. Yeah. So let's go now. I can now let's look again to another pair, which is which one um GBP USD pound USD. Let's look at it. Yeah. It also looks same but difference. Yeah. Let me rate this. Let me rate this. Then let's go straight to the monthly. Yeah. In monthly, guys, we can see that the market was from latest this historic support and demand area, which is this. If you can see the market test it and then go to the upward, test it, and then reject to the upward, test it, and then go to the upward, and then current, we can notice that the market test this area and then reject to the upward. The buyer enter into the market and push the market to this area. So in monthly, if the market break this, because it also have in inner inner resistance here, inner resistance. So if to break this inner resistance and then turn to support like this, that is where when I'm going to look for buy positions like this. But as for now, the market is still in bearish price action. So we expect more, more, more bearish continuation price action. So let's drop to the on weekly, to the weekly. Yeah. Yeah, weekly you can also notice that the market is we are from creating lower low, lower high, lower low, lower high, lower low, and then now creating a bigger pullback in weekly. We can notice that the area it's touched. Let me take Fibonacci rev. So if we press it like this, you can notice that the markets in the area between 0.5 and 0.6 Fibonacci level. So we have to see more price action here, more price action here. So if the market is going to respect this area, then you are going to see that the market will, you are going to expect more bearish continuation price action to the downside. Yeah. So if I put also the let me see the trend line. Yeah. Still in downtrend. The market is still in downtrend. Yeah. So I mean this is yeah, start from here. Yeah. You can see that market is still in bearish. Yeah. So let me delete this and then drop down to the to the dairy. Yeah. Yep. So as usual, guys, we can see that the markets we are still printing lower low, lower high, lower low, lower high, lower low, lower high, and then start now in the day they start to break some area like this one, because this is was lower high, and then to break it and then they test it and then break it. So if I take my Fibonacci from this low to higher, let me see. Yeah. So in a day also we can, maybe I can just put the Fibonacci from this area, maybe. Yeah. So guys, we expect the market to come and retest this area and then go to the upward for those who use lower time frame. Yeah, those guys, day trader, swing trade, no, day trader, and then for the scalper trader, and then you can notice the market going like this way. But for me, I'm going to get to more interested when the market do like this, as same as in euro USD, the previous pair we have from talking about, I expect the market to do like this, break this area, and then do like this. That is when I'm going to look for sell position, because the market monthly and weekly show us show we can notice that the market is still in bearish in a weekly, and then the market is still in bearish in a monthly, and then those are higher time frames. So we have to follow what the bigger boys, big machines. So we have to follow those time frame, monthly and weekly, because weekly and monthly are bigger time we have in this market. So we have to follow them where they land us. So until the market breaks this area, that is when I'm going to notice that, okay, the market now is in bearish. But the markets can also do like this, can break this area, and then retest this area. Retest this area. Let me do like this. Like this. And then go to the downside again, just like this. Yeah. Until it break this area here, and then they test it, and then that is when I'm going to look then maybe for the buying opportunities here. But for now, as long as the market will respect this area, and then they may also respect this area, I expect the market to go downside, because the market is still in bearish. Still bearish. So guys, this is what I expect in this market, this pair. Yeah. In yeah, let me do it this, and then let me do it this area. This also. So which one again, guys? We touch the pairs on the Forex players. Let me. Which one? Okay, let's go. God, guide. Let's see God. How the God gonna give us. Wow, God's brings in something I want to see, guys. So God. Yep. So this is God, yeah, guys. Um, the market was in this um they touch this area and then break to the downside, back to the and then break this area, and then they test this area, which is now supports. So from here we only see um impulse, and then we can notice that there is something like here only this candle, which is bearish candle, you can notice. So if I check my Fibonacci level from here to this, you can notice how the market came to retest this area. If you can, let me read this. How it came to retest this Fibonacci level, and then respect it, and then push the market to the upwards. So for me, guys, I expect in monthly time frame, I expect continuation, more bullish continuation to more bullish continuation, guys. That is what I expect in God, guys. That is what I expect in God, guys. So if I remove this Fibonacci level, so in monthly, that is what I expect. So let's go to the weekly time frame. weekly time frame, we can notice that the markets from 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 let me do it this from making this flag, yeah, like this, yeah, this segment, and then we can, yeah, even this, yeah, yeah, and then it break this chart pattern. So I expect in weekly, we expect the market to come at least to touch this area. So if I take my Fibonacci from this impulse here, where the impulse start from, come on, Fibonacci, come on, yeah, I love you. I love using Fibonacci, guys. Fibonacci is the king in this game, guys. To help us, guys, to know where the market is probably maybe go. So as I said, Fibonacci have 0 0.3, 0 0.6, 0 0.5, and then 0 0.7. That is where like most markets, most uh, price action respect. So this current maybe in my I can notice that there is 3.0 here, 3.0 here at this level, 0.3, 0.3, guys, sorry, 0.0, 0.3 here. Yeah, yeah. So we expect also in, because it's break this flag and then going to the upward. So we expect a bit of retest and then push and then break this area here. So in weekly, guys, I also expect the market to print more bullish candles. Yeah, I expect more bullish continuation price action to be happening, guys. Yeah, so when we drop down to uh, dairy, guys, yeah. Mhm. You can notice that the same level, the same area, I myself bring this zone, this support and demand in weekly. You can notice that the daily start respecting it, guys. Okay, so if I took also again the Fibonacci daily, guys, from this impulse here, the first guys, from this low to the higher, guys, you can notice that the market is at the 0.5 and then 0.6 Fibonacci level, and then it starts respecting this, guys. So guys, we expect, guys, very soon, even maybe this week, the market to reject this area and then go into the upward again, maybe to break this area and then go to the bullish again, latest this area. And then if it's do like this, guys, that is when I'm going to be happy. If it's do like this, it's break this area and then retest this area, this monthly resistance, and then tend to support. That is when I'm going to be happy, guys, because that is when I'm going to look for buyers opportunities, guys, like this. Okay, so guys, this is what I have for you guys, and then just note that trading is reactive, not protective. So in day, monthly, weekly, but I can give you this leakage, guys. Weekly and daily, and weekly and monthly, those are big time frame, guys, which show us the direction of the market. And then the area shift of the market, you can notice maybe in 4 hour time frame daily also, and then drop to the down down time frame, which is 15 minutes, 30 minutes. But I can give you a leakage, guys, which make everything simple for me, which is weekly time frame, monthly time frame, guys. Those are bigger time frame. That's bigger time frame, which show us where the market is going, which is where the market is heading to, guys. So we have to make sure that, guys, we follow what is the market, what is the monthly and weekly direction show you to go, guys. So that is the leakage. Very soon I'm going to drop another video, guys, which is going to talk about which best time frame as a trader to follow, guys. So I'm here, guys, to speak out every leakage, every hiding thing about this market. But yeah, for the time frame, guys, you have to follow weekly and then monthly, and then in daily you have to see the direction, the immediate direction, the immediate direction of the market, or the trend of the market, guys. So guys, peace up. um Guys, I give all guide again, you guys to advise you guys that you have to follow me, so subscribe to my channel, guys, so that you don't miss any video, any any free trading educational video, guys. Okay, peace out.